I see so many people frozen in their journey towards financial freedom because they run into the barrier of financing. Nothing else. This YouTube video should spark some ideas and some creativity about how you might buy your first or your next laundromat, even if you don't have the money sitting in your savings account waiting to invest it. Maybe you've had the idea of buying a laundromat, then looked into just how much money they cost, and now you're feeling dejected. Fear not. The barrier is high of buying a laundromat and how much money you need to buy that laundromat. However, it's not insurmountable. But these are 9 tangible tools that should help you get out there and buy that first or next laundromat and head on your way towards financial freedom. So let's start with all of you financial ballers out there. The first way that you can buy a laundromat is just straight using cash. If you want to finance it, you could self-finance and use cash. There are pros and cons to using cash. For example, some of the pros of using cash are you can make a deal happen quickly. Sometimes you can get a cash discount using cash. And, listen, things can just go a lot smoother when you've got greenbacks backing you up and you're ready to move. Some of the downsides of using cash, however, is that you're taking on all the risk when you're the only one funding the deal. When you use other people's money, or OPM, then it spreads the risk between you and whoever else is co-investing in this business with you. It also ties up your capital, and you can't use it on other opportunities if those should pop up, if it's all invested in the laundromats. And also, your return on investment can go up when you use leverage properly. But if you're a financial baller out there, listen, you can use cash to buy a laundromat and get that deal done, self-finance. Okay, number 2 is, again, nothing mind-bending here. That's using a traditional or conventional bank loan. Now, that comes in the form of a conventional loan that could be something like an SBA loan, or that could be something like a laundromat-specific loan from a laundromat-specific lender. There's pros and cons of using a bank loan as well. Some of the pros are you can get a better interest rate, you can have a lower down payment, or you can spread the payments out over a longer period of time. Some of the downsides of using a bank loan, though, are there's a lot of red tape. A lot of times they have to dig into your personal finances as well, and that gets a little intrusive. And also, listen, sometimes they need you to collateralize that loan with other assets. It could be your house or another investment property or something like that. But listen, some sort of bank loan is probably the most common way that laundromats are purchased, so I definitely needed to include them here on this list. So let's talk about number 3, which is partnerships. Partnering with somebody else who maybe has the capital that you don't have and bringing to the table knowledge, time and energy, the know-how, the ability to operate the laundromat, and pairing that with somebody who has capital but doesn't want to actually operate the laundromat or doesn't know how to, could be a match made in heaven. There's pros and cons of partnerships as well, of course. Some of the pros of partnerships is that, listen, 1 + 1 does not always equal 2 when it comes to business partnerships. When there's a synergy between skills and resources of partners that come together, a lot of times 1 + 1 can equal more than 2. You can get more done together and go farther together when you partner with the right partner. However, there are downsides as well. One of those downsides is that when things go wrong, they can go really wrong. So you want to make sure you choose your partner wisely. This is like a long-term commitment, almost like a marriage that you're entering into when you're entering into a business partner. So choose wisely. And if you do, it can be very synergistic and set you on the fast track to financial freedom if that is your goal. Okay, number 4 is using the equity that is in your house or in another investment. This one might be a little controversial for some people because there's a whole train of thought that says, hey, we don't use debt to buy things. And while that can be good, that is a slow path to wealth building. So if you're here, you're trying to buy a business, you're probably going to want to use leverage to do that unless, again, you are just a financial baller and have a bunch of money sitting around doing nothing. Well, the reality of it is that many of you watching this do have a bunch of money sitting around doing nothing in the form of equity in your house or investment properties. And the reality is the return on that equity is exactly zero. So why not redeploy it to another asset that can be putting cash flow in your pocket? Again, when you're using equity to buy another asset, and I emphasize asset here, that is not taking out what we call bad debt. That is redeploying that equity from one asset to another asset. So now you have two assets with the same amount of equity, both working to put cash flow in your pocket. There are pros and cons, obviously, to using something like a home equity line of credit, a HELOC, or a cash out refinance in order to unlock that equity to redeploy into a laundromat or another asset. Some of the pros are, listen, that equity is currently doing nothing, so why not put it to work and put money in your pocket? Again, that equity is allowing you to now own and control two different assets that are both working to put money in your pocket, or the one that you're living in, your house, is now putting money in your pocket through the one that you've acquired using your equity, the laundromat. Now, there's downsides as well. Cons of using equity in your house or another investment property are you're putting those assets, your house or the other investments that you have, at risk by tying those two assets together. So if something does happen, something does go drastically wrong in your laundromat, it could affect your house or your other investment that you tapped into to get that equity. But I include it here on the list because it can be a powerful way to accelerate your wealth and your journey towards financial freedom. And lots of people use equity in order to purchase assets and accelerate their growth. Number 5 is to utilize a private loan. And a private loan, just in case you're not familiar, is a loan similar to like a bank loan. It's just coming from a non-institutional source. So that could be someone like a real estate investor who has extra capital that they want to lend you to get a rate of return on that money for themselves. It could be your Aunt Angela who wants to loan you money to help you get started on that journey towards financial freedom. It could come from a variety of different sources that are non-institutional sources. There are pros and cons, like everything else, of utilizing a private loan. One of the biggest pros, actually, of utilizing a private lender to finance your laundromat is that you and that private lender can craft terms that work both for them and for you. For example, some of the terms that you can negotiate are the length of the loan, the interest rate, the down payment amount, the payment schedule, security for the loan, and a whole lot of other things you can negotiate that are normally just dictated to you by a bank if you go through a bank loan. So that sounds really appealing probably to a lot of you, and that's a huge perk of a private loan. Listen, there are downsides to utilizing private funding to finance your laundromat acquisition. The biggest one probably is, where do I even actually find a private lender or private capital? Here's my best piece of advice for that. Number 1 is you've got to tell people what it is that you're trying to do, and you've got to ask if anybody knows anybody who's looking to fund a deal on a laundromat. Letting people know what you're trying to do is crucial to achieving your goals, no matter what goals you are, because when people hear of the thing that you need, they're going to think of you first. But let me tell you the 2 most common sources of private funding that I have seen when it comes to acquiring a laundromat. Number 1 is family and friends. And again, that can be controversial for a lot of different reasons. But family and friends offering loans can be a great way to finance your laundromat deal. Number 2 is real estate investors. A lot of times real estate investors have extra capital that they need to deploy and can negotiate loan terms that work for them and work for you as well. All right, number 6 is the mythical, everybody's looking for it, seller finance deal. Seller financing is what I'd call like a subcategory of a private loan. So that's a private loan that comes from the seller. Here's what it is really. It's the seller lending you money to buy their business from them. And that's essentially what seller financing is. So instead of making loan payments to the bank, you're making loan payments to the seller, and that spreads out their payment over time. This can be a great way to finance a laundromat deal. It can be difficult to find seller financing, especially if you need a large chunk of seller financing, but some amount of seller financing is fairly common in this business. Now, that's a double-edged sword. The reason a lot of times that it's common is because it can be difficult to get bank financing if the books aren't in order. So in order to sell their laundromat, the seller has to offer some financing terms to the buyers. However, like anything else, there are pros and cons to seller financing. The biggest pros are similar to private lending. You can set up the terms however you want to. A lot of times there's no pre-qualification process. And also, if the seller's willing to finance their business, then usually it means they're pretty confident that you're going to be able to pay off that loan to them so that they actually get the money that they were promised for their business, which should give you a little bit of confidence if there's any doubt in how much money the business is making. Now, there are downsides with seller financing, and the biggest downsides of seller financing are, number one, trying to find seller financing deals. They can be a little bit difficult to come by. Sometimes. And number two, typically seller financing is coming because there is some level of uncertainty in that business. So you've got to do your proper due diligence with any deal, but especially on a seller financing deal, to make sure that you have clarity and understand exactly what you're getting before you own that business. Number 7 is utilizing retirement funds. Now, this kind of comes in two different categories. You can utilize other people's retirement funds, or in certain circumstances, you can actually utilize your own retirement funds. I have plenty of clients who have, and consulting clients who have utilized what's called a ROBS or self-directed IRA in order to acquire a business. Now, we're not going to go into a lot of detail into ROBS and self-directed IRAs. You can Google those and talk to a financial advisor on what's best for you. But in essence, you can utilize retirement funds to acquire a business. And as you're Googling, just so you know, ROBS is short for, or is an acronym for a rollover business startup. Again, utilizing retirement funds to start a business. All right, number 8, right before our super bonus number 9 way to finance a laundromat deal. Number 8 is to assume an existing loan. It's always worth checking to see whether the loan that the seller has is assumable, and if it is, to check the terms of that loan versus the terms that you could get for an existing loan. Chances are decent that if the loan is even a couple of years old, it may have terms that are different than the terms that you can currently get in acquiring a new loan. So it's worth comparing the loan terms of an assumable loan to the new loan terms you would get by purchasing with, say, a conventional loan. Now, not every loan is going to be assumable, and in fact, a lot of them are not. But again, it's always worth checking. That way, if you have that option, you can make an informed decision. Okay, drum roll, please. Number 9, the golden option of how to finance your laundromat purchase, which combine 2 or more of the above options and or some of your own creativity to finance a deal. For example, you can utilize an SBA loan, which requires you to have 10% down and a little bit of seller financing, sometimes up to 5 or even a little more percent of that 10% that you need to have down, which means you may only need to come with 5% down for an SBA loan if the seller will finance 5% of that loan for you. So utilizing multiple different strategies, combining them together in unique ways, can really help accelerate your path towards financial freedom. Listen, if you're out there and you're looking for help buying that first laundromat the right way the first time, you don't want to reinvent the wheel, check out laundromatresource.com/playbook and see if our program is right for you. We've already invented the wheel. We've already learned thousands of very, very expensive lessons. We're willing to just hand them over to you. So come check out laundromatresource.com/playbook. And if you're trying to figure out how do I actually buy my first laundromat, what do I need to know? Check out this video right here and we'll see you over there.